Look closely. What do we all have in common? No matter what corner of the world you live in, you need food, water, shelter, and money. Half of every transaction involves money in exchange for goods or services. Stocks, a loaf of bread, you gotta pay for it. We spend much of our lives chasing money to make a living and accomplish our dreams. But it's also an instrument of destruction. Some might say evil, driving criminals to lie, steal, and even murder.
The existing banking system extracts enormous value from society, and it is parasitic in nature.
Money is a catalyst for the worst and the best of human endeavor. Before civilization, we created currency, fuel for wars, the path to power, champion and enemy of innovation. Money is so integral to our society and our global economy that its true nature remains a mystery to most. No matter how fat your bank account or how thin your wallet, to us it's all cold hard cash. There are some who want to kill it. Get rid of it. Burn your dollars, your euros, your yen, and transform every penny you have into ones and zeros. Digital currency. Entrust it to the web and computers spread across the planet. Magic internet money. It's called cryptocurrency, Bitcoin. Invented in secret, it was a gift to the world.
It's not just a currency, but it's actually programmable money.
A potential curse on bankers.
And there's nothing that the big banks or politicians can do to stop it.
Breaking every government's grip on money supply.
What the internet did for information, Bitcoin is doing for money.
Regulators, the Federal Reserve, the banking system, at least understand this is a thing that they have to take seriously.
This is going to change the economic culture.
Bitcoin could be a microeconomic miracle worker, and it could be a macroeconomic wrecking ball.
Is Bitcoin the currency of the future? Once upon a time, there was a big party with everyone standing around the punch bowl, drunk. Politicians credited the strong economy to their wise decisions. Businesses jumped into new profitable markets, ignoring risk. In fact, the experts said there was no risk. Then, troubling market data from minor countries spooked the markets. Rumors spread. More bad news rattled housing prices at the heart of the financial world. A major bank went insolvent. Investors and businesses made a run on the other banks, demanding their cash deposits. The largest financial institutions in the center of the modern world were frozen. Assets were seized, banks foreclosed. A credit crunch threatened the entire world economy. And then, finally, the government stepped in. The largest bank bailout ever. Swift action by the head of state had saved the day. Remember that? Governments don't create money from thin air all alone. You play a key role in the magic money machine.
It's not really the central banks that are the problem. I mean, they're part of the problem, but the real problem is that we've given the power to create money to the same banks that caused the financial crisis.
We put our paychecks and savings into a bank account and draw from it as we need it. The banks are custodians of our money. Right? Wrong. It is now the property of the bank on their balance sheets. They can do just about anything they want with it. For example, create new money. Here's how. Your bank account shows $100, but the bank only holds $3 and loans $97 to Bob to buy something. In the bank's computers, you still have $100 in your account, but Bob now has $97 of new virtual money in his account. Just digits on a computer screen. There's no cash, no gold, or anything else backing up the new numbers in Bob's account. Just his promise to pay it back. This is new money created as debt. When those $97 are spent, say in a shop, the shop owner deposits into another bank, and it is lent out again and again and again. And each of these people have numbers in their accounts showing that they own this money. So your original $100 has multiplied. Now there are over $3,300 in the system. This process of loaning out far more money than a bank actually has as cash on hand is called fractional reserve banking.
In the UK, 97% of the money that exists is just numbers in a computer system, and those numbers are created by the banks.
Banks earn untold billions in interest every year by creating and lending virtual money. What's more, banks don't even need your deposit to create new money. If they consider someone credit-worthy for a loan, they can put new magic money into his or her account and start charging interest.
So reporters talk about Bitcoin as though it's the first digital currency. But actually we use digital currency every time you make a transaction through internet banking or through your bank card. Actually, it's not even just digital currency, it's digital currency that is created by the banks, essentially out of nothing.
In other words, all new money is debt. This is the part of money creation that isn't taught in economics class. Money in paychecks, bank accounts, 401ks, that loan to Bob, credit card debt, your home loan, all began life as virtual money created by the banks. The entire system is based on trust. Trust in the bank's solvency, trust in the debtor's ability to repay their debt. If all bank customers demanded just 3% of their deposits right now in cash, this run on the banks would reveal the truth. Almost none of that paper currency you think is in your bank account exists. It never did. As much as 1/4 of our best and brightest are being lured by the siren call of the money machine. Instead of science, engineering, or medicine, they chose a career betting with other people's money. To get rich quick, very rich. And sometimes they take shortcuts.
Getting by on a nickel and a dime. Money has a funny way of bringing us down. They say it makes the world go round and around.
My ancestors in Greece talked about the corrupting influence of power. And nothing has changed in these 3,000 years. When you give control over massive amounts of money to a few individuals, they will take advantage of that control.
In medieval Europe, a banker who couldn't repay depositors was hanged. Today, that same banker would get bailed out, paid bonuses, and enjoy some tax benefits too. To date, no senior U.S. banking executive has been charged for selling the bad loans that fueled the Great Recession. In December 2014, just 6 years after the last banking crisis brought the world to its knees, a congressman snuck a last-minute provision written by Citigroup into a crucial funding bill. The provision allows the largest U.S. banks to once again make risky derivatives bets with bank deposits. But no need to worry. If the banks implode again, lost deposits must be paid back by U.S. taxpayers. Today's financial innovators package assets in ever more complex ways. Slicing, dicing, securitizing, always using someone else's money. They sell debt, transfer risks, leverage bets. That's what they call innovation.
When you're talking about financial innovation, Bitcoin certainly is a very good example of innovation.
History teaches that the most revolutionary and disruptive innovation nearly always comes from the fringe, not from corporate cubicles. True innovators see the world differently. They see the big picture, creating new products and entire systems that lead to new industries. Steve Jobs called them the square cogs in round holes.
It's unsurprising that new innovations always come from a niche group of early adopters because it is inherently very hard for many people to realize the benefits of new technologies. In 2011, most Bitcoin community people were either people from the technology space, the geeks and hackers, or people from the traditional financial industry. There are even some bankers and hedge fund traders using Bitcoinica at that time as well, which was really surprising to me.
A radical new idea is often met with skepticism, ridicule, even hostility from those who stand to lose the most from its success. Case in point, the automobile. In the late 19th century, Carl Benz and others built the first cars, contraptions that could threaten the stagecoach and railroad industries. These self-propelled vehicles, or road trains, would certainly scare horses, injure people, and damage roads. Cars, the railroad barons said, were just too dangerous. And to protect us, they used their power to pass a law in 1865. It required every automobile in England to observe a 4-mile-per-hour speed limit and to be operated by a crew of 3, a driver, an engineer, and a flagman. This heroic flagman walked in front of the car to warn fellow citizens of the coming danger. The railroad tycoons, the lawmakers, the self-appointed gatekeepers used regulation to stifle innovation. But they didn't invent the flagman. He's been around for a long time. For centuries, very few could read. Books were copied by hand. The people in control, political and religious leaders, wanted to keep it that way, and they greeted Johann Gutenberg's printing press with licensing laws, publishing bans, taxes. In some parts of the world, printing was a crime punishable by death. After all, they were just protecting us from dangerous ideas. Before the printing press, there were an estimated 30,000 books in all of Europe. 50 years later, there were 10 million. As Gutenberg's invention flourished, the Dark Ages withered. Progress couldn't be stopped. But the flagman never stops trying. His masters set him loose on each of these innovations because they threatened someone's profits, someone's control. But remember, this is a story about money. What if a technological innovation allowed anyone in the world to be their own bank? To create a currency free from taxes and banking fees? The U.S. Constitution forbids citizens from printing or minting their own currency, competing with or undercutting reliance on the U.S. dollar. In 1998, Bernard von Nothaus decided to test the resolve of the federal government.
The Liberty Dollar was available in gold, silver, platinum, and copper. It was available in 3 forms, both in specie, in other words, gold and silver, in paper, as warehouse receipts, and in digital form. Obviously, the government didn't like it. They arrested me and convicted me of counterfeiting, fraud, and conspiracy, and I'm currently awaiting 22 years sentence in federal prison.
Lesson learned.
At a hackers convention in the Netherlands, there was a young hacker there who used the alias of Satoshi Nakamoto. And he talked to a friend of mine, and he identified the Liberty Dollar and me as inspiring him to create a new currency.
Bernard von Nothaus's arrest for creating private money may also have inspired Bitcoin's inventor to keep a lower profile, publishing the invention under an alias and vanishing.
Part of me is interested to know who Satoshi is. Maybe that's part of the mystique of the story. It's completely irrelevant to the functioning of Bitcoin because we have the code to read, but it would be kind of fun to know.
Who is Archimedes? Who is Euclid? We don't know. We don't know if Euclid was one person or multiple people. And you know what? It doesn't matter. Euclidean geometry works whether I know who Euclid was or not, whether Euclid was a moral and good person or whether he was a corrupt plutocrat and a bastard. Science and mathematics have essential truth that stands alone, irrespective of its inventors and irrespective of their motives. Well, Bitcoin is a system based on mathematical truths, and these mathematical truths stand alone. We can read the source code in Bitcoin and understand it, and it will be true whether Satoshi Nakamoto is a man, a woman, a collection of individuals, a government agency, or aliens from the future.
Bitcoin is digital currency and computer software. Capital B Bitcoin is the shared code that creates a global payment network using computers connected to the internet. Bitcoins are virtual currency, digital money created, stored, and exchanged on that network. But unlike virtual dollars created by a banker, this new currency was created with math by an anonymous inventor. Bitcoin is an open-source software protocol like much of the code supporting the internet and email. Open source means anyone, everyone can use the protocol. No one person or company can control it. Every change to the software is public, open, and transparent. The code was first developed by Satoshi. Then there were dozens, now hundreds, of programmers constantly collaborating to improve Bitcoin's features and security. So what makes Bitcoin a breakthrough? It tackles an ancient human dilemma and solves a computer science problem. Any shared information or data can be flawed, corrupted. Anything can be faked. How do we know that what we're receiving can be trusted?
In our traditional mindset, it's very important to know who is behind this currency because their reputation is significant in knowing that our funds and the true wealth is actually safe.
In finance, we rely on trusted third parties like banks, credit card companies, remittance services. They keep track of money as it moves from one account to another, and they charge us handsomely for it. We trust that their digital ledgers of credits and debits balance. A financial system that cuts out these middlemen could be faster, cheaper, and more secure. But Bitcoin is digital. Music and movies are easily pirated, copied, stolen. How can a digital currency retain value if anyone can make 1 million copies? The answer is at the core of Satoshi's invention. A Bitcoin is not a file on a computer. It's an entry in the publicly distributed database called the blockchain. Just as the Medici kept a ledger of credits and debits, today's banks record each transaction as a plus and minus in their ledgers. Now we call them databases. Bank accounts are replaced by a digital wallet that you alone control. Bitcoin's ledger is the blockchain, a record of every Bitcoin in existence and every Bitcoin transaction ever made. It always balances because no Bitcoin ever leaves it. When a Bitcoin is sent from one digital wallet to another, what they are really sending is control over that part of the database. Code that is a unique key for the new owner. As the network processes transactions, it constantly synchronizes the one ledger across the global network. Each computer or Bitcoin miner has a complete and identical copy. And because the blockchain is public, it cannot be controlled by any one person or computer. Owners of the Bitcoin mining computers are rewarded with new Bitcoins for processing transactions and keeping the network secure. In other words, the Bitcoin network replaces banks and bankers. Today, the combined computing power of this global network is greater than the 500 biggest supercomputers combined, times 10,000. And because every transaction is verified and recorded by the network, a Bitcoin cannot be forged. Digital currency cannot be debased with cheap metals or printed by the billion at will. Too much currency can unleash a monster. Skyrocketing prices, trillion-dollar bills that can't buy a loaf of bread.
There's a big movement in the U.S. demanding that the Fed be audited so we can find out what they're doing. Nobody really knows how many dollars are in existence, for example. Ben Bernanke created several trillions of dollars over the last several years, but nobody really knows where they landed.
At any time, for any reason, the central banks can print as much money as they want. They call it fancy things like quantitative easing. And when they do that, it makes the dollars or euros or yen that you and I have worth less. So if the world starts using Bitcoin as their currency, it can't be controlled by central bankers or politicians.
Remember, central banks create money to boost the economy and try to pull it back out before inflation heats up. But no one knows how much magic money global banks are creating to boost their profits with questionable loans.
Bitcoin's completely the opposite. It's totally transparent. You know exactly how many exist.
The computer code behind Bitcoin has a built-in brake pedal, cutting the creation of Bitcoins in half every 4 years. This ensures a transparent, controlled scarcity and ultimately limits the total number of Bitcoins to 21 million. No lobbyist, no politician, no banker can create more or change the mathematical rules dictating their creation.
Advancing accountability. And that's one of the things I think is most exciting about Bitcoin and the technology behind it, is not so much that it will supplant the dollar or that it will supplant government itself, but that all of a sudden there's a competitor to government, and that government itself now needs to look over its shoulder more than it did.
This new digital currency can be purchased online with a credit card or in person with cash. And it has the 5 key characteristics of money. But is it a store of value? Is it stable, or will it diminish over time, like a commodity rendered useless or a crop that fails? The ultimate power of a cryptocurrency is unleashed by mainstream adoption and an ever-growing volume of transactions.
With Bitcoin, the currency has been created much more slowly than other currencies. And the effect of that has been to turn it into what is essentially a speculative asset. If you ask a lot of Bitcoin enthusiasts whether they're spending the currency, they're not. They're sitting on it and waiting for the price to go up. It isn't a currency if you don't use it to pay people. The point is, the average person is quite happy to walk into a bar and hand over, a $5 note in order to get a drink. So you've got to realize that most people are happy with the money system they have.
If most people are happy with cash, they're in love with plastic. In the US, 2/3 of in-person sales are done with debit or credit cards. That plastic is a 60-year-old technology, created by a middleman, never designed for the internet. Each transaction requires personal data, like your name and address. Credit card databases are regularly hacked, with fraudulent purchases charged to your account. Criminals buy and sell stolen credit cards by the thousands in dark corners of the internet. In some parts of London, 1/3 of all online credit card transactions are fraudulent. Card issuers don't hold you responsible for fraud, but protection comes with a price. 2 to 4% in fees. That's $50 billion a year.
The issue with credit cards from a merchant's perspective is there's a lot of risk. If they take a credit card, there might be a chargeback, there might be fraudulent purchases. In fact, there's hundreds of billions of dollars every year in fraudulent purchases.
A Bitcoin purchase is done for pennies, but there are no protections. If you lose your passwords or are fooled into paying the wrong person, you can never get your money back. It is like digital cash. For a seller, this means no chargeback risks. For an e-commerce company like Expedia or Overstock, cutting credit card fees can double their profit margin.
You could not miss the point more effectively than by thinking of Bitcoin as a currency and payment network that will make shopping easier for the first world. Bitcoin is about everything else, everywhere else.
There are 2.5 billion people without a bank account. With Bitcoin, a mobile phone with an internet connection is now a bank with access to the global marketplace.
What happens when Bitcoin services and infrastructure and Bitcoin wallets and payment processors start going into these countries? These people will be able to gain benefits from trade where they could not previously. These people will be able to send money home, international remittance, which is one of the major pain points of the current financial system.
Yeah, if I send $100, with banks it's going to cost me 20%, Western Union is going to cost 10%, other options that are competing with Western Union is still going to be about 5%. And if you are sending to really remote areas, it's going to be anywhere between 15 and 30%.
So in terms of money remittances, it's going to be a game changer using Bitcoin. You do not need a bank account. You just need internet connection and a wallet to get set up. It's a tool to give people an access into the global ecosystem and give them a promise for an economic future, and specifically provide a way for them to not be dependent on a government that could shut down their bank accounts or even could go into their bank accounts and take out finances.
Goldman Sachs came out with a report and they basically looked at if you were to replace all transactions globally, so FX, bank-to-bank transactions, with the Bitcoin protocol, and still charging 1%, mind you, it would save the global economy $200 billion, so not million, $200 billion a year in saved transaction costs, which ultimately goes back into the hands of the consumer.
An international wire transfer can take up to 4 days. Yet the internet allows us to instantly and globally share text, pictures, videos, anything digital. Why not money? Money which we now know only exists as digits in a bank's database.
With Bitcoin, you can send $1 or $1 million worth of value anywhere in the world. You can do it for free, or you pay the Bitcoin network fee, which is still just around a penny. And there's nothing that the big banks or politicians can do to stop it.
A cryptocurrency that can only be created and transferred with computer networks may be the next step of the digital revolution.
A lot of people want to criticize Bitcoin for being used for illegal things or illicit things, but if you look at it, the most popular currency in the entire world for doing bad things is the US dollar.
If you think of Bitcoin as a platform instead of a currency, then you really begin to see the potential it has.
The ledger, which cannot be forged, it cannot be changed, and is universally accepted, is genius. There will be Bitcoin technology forever, and it'll have applications for years to come.
Creating a secure global payment system may just be the beginning. Patents, contracts, land titles, proof of ownership can be baked into Bitcoin, securely held in the public ledger.
I read up more about Bitcoin, I played with the source code, I built some things that I realized this is actually a very, very powerful protocol. It's not just a currency, but it's actually programmable money.
The digital age has fundamentally changed the world. We have embraced digitized music, film, medical records, communications, the internet. The free exchange of information and currency can fuel revolutions, help in a disaster. But our money is shackled to the 20th century, manipulated by governments and banks. The champions of Bitcoin ask us to imagine payments without a middleman, investments without a broker, loans without a bank, insurance without an underwriter, charity without a trustee, escrow without an agent, betting without a bookie, record keeping without an accountant, global, secure, nearly instant, and free. Is it fantasy or the future of money and commerce?